Hey guys, just a quick one for you. So, looking in review, I hope you guys can see what I was discussing. So, quick recap here. So, the longest standing all-time high for 2021 was formed in April. To be specific, April the 14th. Okay. So, from that point, we haven't had a long-standing all-time high of that nature. Price pulled back very sharply. And then we see we had a body close on the daily time frame above this previous all-time high. So we had a good confirmation that the price would like to continue. I mean, the order flow is towards the positive side if I connect these together from the market order book. Now, price pulled back. And again, here we have a demand zone. Now, if you're not too sure about order markings, I understand. But in essence, we had supply here. The price pushed very strongly short. This supply zone is instrumental in the price action that we saw during what I call crypto summer winter, which is the months of May, June, and July, where the prices were very, very low. Many people who bought, in the first quarter of the year and in April also were really feeling the pain of, seeing 50% of their portfolio gone for quite a sustained time. Okay. So once we closed above this area of supply right here and price pulled back to the other side, we had a reoptimization of demand for supply. So on the market order book side, supply is demand. So this range right here of price action is open for demand orders for price to push long or for buy orders. We had a demand zone formed here, which specifically is called a nested demand zone or a demand area created within a flip zone. All right. So again, if we look at the price structure here, our swing low is here at A. Here's the swing high. Now, instead of us having now, I was looking for a wick close above this previous high. Now, to be fair, this does have its own interpretation here, and I'll explain. So the body of the candle, we wanted a wick closure here, which would have been the price closing above a previous monthly high. But what we've had is a smaller reversal signature. Now, that reversal signature of the body of the candle closing above the previous high suggested a continuation. And then we've had this reversal signature here, which is a daily reversal signature. If the wick of the candle, so this blue candle right here, had closed with the wick of the candle above the high and the body beneath, then we would have had a monthly time frame or a monthly scale or larger time frame or induction for reversal. So that larger induction would have triggered a much stronger short than what we're seeing now. To everybody else who is not a trader, this looks like the price is starting to crash if you just got in now. Okay, but we're not really having a crash. We're having a healthy correction. All right, no matter what news you hear about crypto, or whatever you see on newspapers, articles, even from crypto YouTubers, the fundamental thing that causes any financial market to move is liquidity and volume, of course, but primarily liquidity. All right, if there's not enough, for example, demand liquidity to be able to sustain the price to get to 70K, no matter how much we say, the price will not get to 70K. That's how it works. Okay, you can see supply and demand like engine fuel or just fuel for your car or petrol that you need in order for the price to, or for the, in this case, the price to move up and down. Okay, so if there's not enough demand, now over here we have unfulfilled efficiency. So what does that mean? In essence, the price was supposed to return to this area of demand where the crux, I called it the crux, but yeah, the crux of orders, I can call it that. It's good grammatical English. Or in essence, where most of the orders are clustered together for buying positions, and the price didn't reach there to trigger those entries. So this movement we see here, you've noticed these candlesticks, we had some bullish activity here, but the price wasn't really moving as it should straight after, which means that we had unfulfilled efficiency. Okay, now price spiked up for a very strong long. And I want you guys to notice this 70,000 is not too far away. If I draw an arrow here or a line, 70K, if I just, what I can do here, let me just put this in. So if I put exactly where 70,000 is, 70,000 is a very short distance from where the most recent all-time high is right here. Okay, so as a psychological level, every time Bitcoin or any cryptocurrency makes a new cent value, so from 10 cents to 20 or from 10 to 15, it does have a psychological reaction in the market. People react in different ways to that information. If you're already in, you're even more strongly bullish. If you're not in yet, You have FOMO possibly that are missing out. The price has just broken a new all-time high, and etc. That's just how humans are. So in essence, the price, notice it came very close to 70K, but didn't reach there. We don't have enough liquidity for it. We have the amount of news and anticipation for it and stuff, but there's not enough liquidity. So price has to pull back to this very major area here, which is the gateway, which I believe will unlock the next rally in price. Now, I want to put this as a disclaimer. If the body of any daily candle closes beneath here, then we're going very strongly and very sharply back down to lower figures, even below 50K. And I'm brave enough to say it. So in essence, what's happening right now? So if you're a crypto trader, investor, or you're not involved in crypto anytime and you want to know, okay, when should I buy or what should I do? Well, the one piece of advice I can give to you is that wait for the price to get within this demand zone. Now, the range of the demand zone starts from about 57,000, let's call it 57,300, and ranges all the way down to the edge around about 55,300. So we have this $2,000 range here of where price will be in optimal areas of liquidity to be able to actually go to 70. So have you noticed it? Well, as you've noticed, crypto markets are down at the moment. There's a lot of percentage losses, but there's nothing you should be worried about. This is natural markets. Okay, at the moment, Bitcoin still has a very heavily dominant effect on what the price action of other cryptocurrencies or how they behave. So what I would say to you is that if you're looking to just invest, you want to put something down, now is not the time. If you notice, the price just crossed beneath 60K, which is another psychological level, and that caused a rebuy, hence why the price is pushing. It dropped just around about 58, so about $2,000 less, and it's coming around about 60 and stabilizing. But again, the bearish pressure is still heavy and price should be pushing back down. And a lot of people who are new to crypto probably will be a part of this selling candle where they're pushing money out of, either selling off their Bitcoin and moving into another asset or something of that nature. Okay, so once the price gets here and we see how the reaction is, even if the price was to drop beneath, but this is a more technically sound area to buy, not just Bitcoin, but any other crypto before the potential launch off. Okay, we still have good market structure here. We still have a C swing that needs to be formed though. The parent swing is still bullish. And from the price action here, it still looks very clear that we are going for another run. So I just want to put that out to you. Okay, that this is just normal market cycles. I mean, I know the Taproot update for Bitcoin just came out, but funny enough, the price went short instead of long, because this is how markets are. If you're an institution and you want to put money down in a crypto or you want to buy Bitcoin, for example, you don't want to be the last one to buy Bitcoin, and you definitely don't want to buy it at the most expensive price. Okay, now the Taproot update that's just come out should be positive for Bitcoin. And you notice the market opened with a very bullish movement here. If I go to the H4 quickly, you notice that when the Taproot update, so this is the new day, notice for the first few hours we had a spike here, but liquidity always beats fundamentals. And I know some people would disagree with me on that, but no matter how much fundamentals there is on a project, positive or negative, if the liquidity is not there to support that move, you won't get the move that people expect or you would expect. So right here on the H4, I've drawn this demand zone here. This area of demand is what the price used to get to the highest point that we've had in Bitcoin's history, which is at 68. All right. Now notice we had a strong close beneath previous week and we've had a return here. So this bullish news actually played in for a re-entry for a short. So I had a few students who were in Bitcoin long who I told them to close very soon because the market's about to drop. And as you can see, demand at the moment, notice here, has been re-optimized for supply. So in essence, this same demand zone that we could use for buying price on the order book is using for selling, all right, and in a very good area too. So this is actually a great entry for a short. So this is why I would say to you, just hold off a bit, just wait, we're almost there. We've got beneath 60 already. We just need a little bit more before we take off. So I hope that helps you to have understanding about what's going on in the market. So don't be afraid if you're holding and you bought at an early price or you're at a high price. It doesn't matter. As an investor, your key is that you want to be having technical backing to understand what's going on. Even if you bought at the most cheapest price, if you have the ability to buy more, buy some more. Okay, dollar cost average into the project. Okay, and this is not financial advice. This is what I would say. So in essence, in short, guys, don't use your emotions to be able to ascertain to what the market is doing. Look at the liquidity in the market to understand what actually is going on. So hope you guys enjoyed that. and I'm out. Take care.
Uh-huh.